Welcome everyone to this webinar on the AI revolution. My name's Neal Bawa and I'm here with my co-host Anna Myers. We both work for two companies, Grocapitus and Mission 10K. And both of these are data-driven real estate companies. And our topic today comes out of our interest and I would say a healthy obsession that Anna and I have with AI. We are an AI first company, which means that all of our employees are required to spend 1 hour every day working on AI. So that's stuff that maybe we'll talk about in the questions. If you guys have questions about some of the things that we are doing in AI, not necessarily the content of the webinar today, because today we're going to talk about all of the different impacts that the AI revolution is having. And then toward the end, we're going to give you some ideas of how you can possibly invest in AI. And it's not necessarily an investment in data centers. We're not doing a data center pitch. We're not, selling a data center. This webinar is purely informational, where we just basically talk about what we're seeing out there, and hopefully also get some feedback from you. So I briefly introduced myself and Anna. We work for multiple companies. Our projects are in 10 states, 17 metros, 25 different properties. At last count, we had slightly over 1,300 investors for a portfolio that's over 660 million. Here is I don't know why this picture came back, Anna. This is an older, outdated, slide. So it's back then.
Very outdated.
All of the ones that you're seeing here that appear to be incomplete, they're all completed properties. So every one of these that looks like halfway done, they're all done. They're all completed.
That's crazy, right?
So the slide came back in. This is about half of our real estate portfolio. And we've had 9 exits with about a 33% annualized IRR. Here are 2 properties where we more than tripled our projected IRR. So Equinox on Prince, 17 going up to 59, Fairview, 16 going up to 60. And here are 2 more where we just doubled the projected IRR, or slightly better than doubled. So 16 going up to 37% and 20 going up to 49% for our investors. Our investors love what we're doing. Here's Jennifer. She is a super experienced investor. She met me recently. She compares us to much larger companies with many more projects, and she thinks that we come out ahead. She also really enjoys our high efficiency processes. I'm not responsible for those. Anna is. And she likes the fact that the team's really not changed much since the beginning. Anna and I have been at it for 8 straight years. Here's Dr. Pada. He's a general partner with lots of deals of his own, both as a general partner and as a passive investor. Check out his comments in orange. Comes down to use of data to optimize results. We're very, very good at that. And that's why Dr. Pada is with us. All right, folks, let's get the boring legal stuff out of the way before we dive into all the good stuff. This is just a friendly reminder. This webinar is for educational purposes only. And just because, Anna and I are sharing our personal opinions, it doesn't mean that you are guaranteed to make a fortune in real estate by listening to this. So do your own research, consult professionals. And remember that investing in real estate and stocks is risky stuff. And don't be shy to type in your questions. We're going to do our best to answer them at the end if we have time. And don't worry if you miss anything. We'll be sending out a recording of this whole shindig tomorrow, or day after tomorrow, actually. All right, let's get started. Let's get started at the beginning of this incredible AI phenomenon, right? It took Netflix 18 years to hit 100 million users. It took Spotify 11 years, Twitter 5, Facebook 4.5 years. But it took ChatGPT 2 months to hit 100 million users. So right now, they're somewhere between 700 million and 800 million. By the way, that Instagram Threads thing was sort of gamed, so I, might as well skip it because that wasn't real. But in 2 months, right? So this was the first sign of AI mania. And I remember distinctly November 30th, 2022, and we're coming up to the 3rd year anniversary of the ChatGPT moment. And it's been incredible since then. What's impressive is even though dozens of companies are releasing large language models, as of now, ChatGPT is still at the very top 3 years later. So these are the numbers for last week. In a couple of weeks, a model named Gemini from Google will come out, and I think that these numbers may change. But for the moment, ChatGPT is retaining its lead. What's really impressive is the amount of money that is pouring into AI. We've never seen anything like that, right? Record funding is meeting record FOMO, or fear of missing out. OpenAI itself recently did a $40 billion investment at a valuation of 300 billion. And when we created this deck, it was 300 billion, right? Today, OpenAI's valuation has jumped from $300 billion to $500 billion. That's right. $500 billion for a non-public company that has never broken even, and actually is making it very clear that they won't break even or make profit until 2029. $500 billion. Look at scale, right? Meta invested a huge amount of money into them, basically invested $14 billion for a $29 billion valuation. That's crazy. That's 50% of the total valuation, right? We've heard about X, we've heard about Anthropic, we've heard about Safe Superintelligence, Grok. All of these companies are getting incredible numbers. So much so that even though venture capitalists invest in thousands and thousands of different verticals, take a look at this circle here. A third of all VC funding in 2024 went to AI. This year, it looks like it's going to be closer to 50%, right? And that 33% number was a crazy 80% increase from the previous year. So the numbers are astonishing. And because of this, if your startup is an AI startup as opposed to any other kind of startup, you get premiums. Even at the seed level, when you're just setting out, if your startup involves AI, real AI, you get a 39% premium. And then as you go through series A and B and C and D, that premium actually keeps going up. In fact, at the series D level, where OpenAI and a whole bunch of other startups are, you're basically getting 3 times as much money for the same dollars, for the same revenue. That's just crazy. We've never seen anything like this. And as a result, this guy, Torsten Slog, I love listening to him. He's chief economist at Apollo. This is one of the biggest groups out there. He says, and this is very interesting, he says, if I take $100 as an investor and I buy the S&P 500, the index of 500 shares, I think I have exposure to 500 different stocks. But really, I'm just betting on Nvidia and the AI story continuing. So the market has become extraordinarily warped, where even the S&P 500 is dominated by a very small number of companies. And this is resulting in people talking about this potentially being a bubble. So you see the IT bubble, you see this gray bar here, that was the IT bubble. And at its peak, the IT bubble right here, right, we had the top companies with evaluations of 25 times 12 months forward PE. If you don't know what that is, basically just means that they were very highly valued. And of course, we all know what happened. They all crashed and burned. And today, if I basically include the top 10 in the S&P 500, forget the 25, I'm now approaching 27, 28. And this chart is actually a few weeks old, and we're probably up here somewhere. So what we're seeing is crazy numbers. Now, if you look at the S&P 500, excluding the top 10, companies like Nvidia and Meta, then all of a sudden you're actually at a pretty decent number. You're below 20, and that happens quite often. So what's essentially happening is that the top 10 companies in the S&P 500 are dominating the stock market in a way that we've never seen before. And as a result, these individual companies that have exposure to AI have numbers that are just absolute maddening numbers. Nvidia is worth 4,000 trillion, right? That's 4 million. 4 million times a million. Insane numbers, right? Microsoft's worth more than $3.5 billion. Apple's worth more than $3 billion. The numbers are absolutely stunning. We've never seen anything like this in the history of the stock market. And the number one stock there, of course, is Nvidia. Did you know that Nvidia is the best performing stock in the S&P 500 over the last 5 years, over the last 10 years, and over the last 20 years? So even if I go back 20 years, this is the number one stock in the S&P 500. And after gaining 171% last year, it's still up 32% this year. Those are absolutely mind-boggling numbers. And so it's only natural for people to say, well, this whole thing, it's got to be a bubble, right? But a couple things to remember, right? First, if it's a bubble, it can be a much bigger bubble because In 1999, when we had the last internet bubble, we had 250 million people connected to the internet. So about 4% of the world's population. Now, thanks to smartphones, 10% of the world's population is connected, right? So 800 million people. So again, the bubble can get much bigger before it either deflates or just completely blows up. One thing I wanted to point out was, yes, we all talk about the dot-com bubble. We all joke about the fact that, that bubble imploded in 2001. But take a look at all of the companies that survived that dot-com bubble or they came after. These are all internet companies. These are all companies that either are core internet companies or have greatly benefited from the internet. So even though that bubble burst, this is what came out of it. Trillions and trillions of dollars of value. So no one should ever think that these bubbles don't create value. It's just they get overhyped at some point in time. So, we put this slide in about 6 or 7 weeks ago, and this slide has unfortunately now turned into a lie just in the last seven weeks. So this guy from BMO is one of the largest banks in the world, Brian, he says, it's early innings. In 1999, 2000, so he's talking about the last bubble, we were doing crazy stuff. Companies were buying other companies with bad stock. That sort of behavior isn't happening right now despite the AI boom. So this guy said it, a little while ago, and I put the slide in about 7 weeks ago. Anyone can tell me in chat why this is no longer true? Why this is now a lie? This slide is a lie? I haven't taken it out. Anyone? Anyone in chat? Why is this slide a lie? Come on, guys. Anyone? No? It's a lie because unfortunately companies are now buying each other, each other's stocks. They are basically doing circular transactions. OpenAI is very highly responsible for it. AMD is doing it. So is Nvidia. So OpenAI, AMD, Nvidia are now doing this circular transaction. So unfortunately, while I had put this good news in, unfortunately, in the last 6 or 7 weeks, they're all doing really shady stuff. So we are now seeing shady stuff, and that we should be very careful about that. Now, having said all of the bad stuff, so I gave you all-time high PE ratios. I gave you the fact that the S&P 500 basically has been corrupted by the top 10 stocks. So I give you all of that bad news, right? Including what the guy was just saying. But I want you to step back for a minute and understand that the vast majority of the smart venture capitalists in the world consider AI to be sort of the fifth or the sixth major inventions ever created that completely changed the world, right? So there's a few that are missing from here. The steam engine is not in here. Oil is not in here. So you can combine oil and steam engine. But most of the smart people that I know basically talk about the fact that this is one of the 5 or 6 greatest things that humanity has ever invented. And I'm going to argue that it's likely that they're right. If they're right, and we'll talk about why I think they're right, the stock market could end up much, much higher than it is today. So I want to point out to you from left to right. So bottom left is the PC revolution. We've had, when it comes to technology, I'm just talking about technological revolutions in the last, call it 50, 60 years. We've had 5 of them, with AI being the 5th. The PC revolution, once it started, it tripled the value triple the market cap by 3.7x. The internet, 3.5x. Mobile took it all the way up to 3.4x. And the cloud revolution, which has been the last one, cloud or AWS, whatever you call it, basically took it up 3x again. So it seems that every time there is a technological revolution, whether it's PC, internet, mobile, or cloud, the stock market jumps 3x. If that is the case, and the market is going to jump 3x again for AI, we are nowhere near the top. And if you're thinking, yeah, but maybe this time we don't get a 3x. Maybe AI is not as powerful as the last 4, right? Because the last 4 were all 3x increases. Well, most people that we talk with believe that it is the most powerful of those 4 examples that I gave you, right? So that whether it's PC, cloud, smartphone, this is the most powerful. Why? Because when you look at some of those, The internet, for example, didn't have a radical impact on automotive. The internet didn't have a radical impact on logistics. But we are seeing artificial intelligence being used to create astonishing new breakthroughs in the automotive industry, especially when it comes to both batteries as well as old-fashioned engines, ICE engines. Logistics, we are seeing incredible work being done in the logistics arena. It's just easier to apply AI to every single sector in the world. It's easier than it was to apply, let's say, a PC or a smartphone or the cloud. And what's nice is the PC, the smartphone, and the cloud are all things that we set in place. We already had 800 million active users, which is why the AI revolution is going faster than the previous four revolutions. So what does this do for jobs, right? One of the biggest, concerns is what does this do for jobs, right? The shock waves. So we've seen charts like this. This is actually a pretty popular chart, and this is sort of a very scary because what it shows is, well, if ChatGPT releases and all of a sudden jobs, instead of going upwards, start going down, right? Then there must be some correlation between these two. So a lot of people have shown this on the internet, but there is no correlation that I'm aware of. This is just a chart that points out this is when ChatGPT released. It's not trying to correlate anything at all. We've also seen other groups basically talking about there being a huge impact amongst younger workers, right? So we've heard that graduates that are just coming out of college, there's an impact of about 44% on those, entry jobs at 32%, and then, white collar jobs at 13%. These are some of the numbers we've heard. We've heard that 80% of the US workforce could have at least 10% of their tasks. That's not 80%, that's 88%, right? Could have 10% of their work tasks affected by AI. We've also heard 19% of US workforce could see 50% of their tasks impacted. So there's a lot of these numbers that we've gathered together for you, little sound bites that we've gathered together for you, right? Here's some more. 30% of current US jobs could be automated in 5 years. 60% will have tasks significantly modified by AI in 5 years. The total US jobs at risk in coming years, and we don't know what that is, might be 5 years or 10 years, is 50 million jobs. So there's a lot of these statistics that people are throwing at us. But so far, when we actually go out and do an analysis, right? When we do an actual analysis of how many people that have been exposed to AI have been laid off, we can actually find no evidence. People that have actually done studies on this have found no evidence. Essentially, you see these three lines, the dark blue, the light blue, and the orange. These lines would have to have a curve to them for there to be an actual impact. So far, we're not aware of any impact. And a perfect example is our own company, Anna, right? So if you think about our company, we have had a reduction, and that is a copywriter. So far, in our company, all they've done is
part-time copywriter.
A part-time copywriter. But every other job in our company that we've automated with AI, over 400 or 500 automations and counting, has not led to a person being let go. It's possible that we're able to get certain things done faster or get certain things done quicker, but it certainly has not been enough for us to lay off people. So keep that in mind, that any fears that people have of AI taking jobs away, currently there's no evidence of that in the US economy. So if we're slowing down, it's just because the economy slows down from time to time. It doesn't have anything to do with AI. All right, moving on to the next topic. But before I move on to that, right, I am going to spend a couple minutes talking about an opportunity. And some of you have seen this opportunity before. This is an opportunity for you to invest in a very unique tier called pref equity or preferred equity in a beautiful brand new property built in 2024. You can see the property here and the pool. It's a gorgeous, gorgeous property. And this is an 18-month investment time frame. There's no construction involved because this property is already built. And you get 7 to 8% cash flow distributions that start immediately. Just so you know, we're distributing 7 to 8% cash flow to about somewhere between 70 and 80 investors. And we have been distributing that money for about at least a year, Anna, right? Maybe a year and a half?
Not in the entire amount of those people.
Not the entire amount.
Yes, Because
Yes.
we've just been slowly adding people,
Slowly adding people, right?
as the property needed it. Yeah.
Exactly. So essentially, what's happened with this particular property was that as we built the property with interest rates being very high, we ran out of cash. And so we basically said, okay, we're going to bring in preferred equity. And these preferred equity is a very unique tier. So we had about $16.5 million in LP or limited partner equity, also called common equity in the property. The preferred equity sits on top of them. And it's very advantageous because what that means is that the senior debt is smaller. You've got a big, chunk in the middle here. And that pref tranche, not only your principal, but also your returns come before this limited partner tranche, which puts you in a great position, right? Because that $16.5 million, that big chunk that you're seeing down there, that's a cushion both for your initial investment and for the interest that you receive, which is basically 14%, unless you invest a lot more money, and then it's 16%. So this means that the day you make the investment, now you're eligible to start getting 7% annualized. We paid out every quarter because it's hard for us to pay it on a monthly basis. So it's paid out on a quarterly basis. Also, this is a shorter term investment. If you have cash in the bank and you're making 3 or 4% in money market, or you're making 6% in lending, this is perfect for you because here you could be easily making 7% on the front end, 7% of the back end in a short term investment in 18 months. And that's secured by that $16.5 million in equity that is junior to you. So as you can see, stunning property. This is the clubhouse. Absolutely gorgeous property built. We've got about 150 tenants or families living in the property, and we continue to lease it up. It's in Phoenix, which, as you know, many of you that have come to our webinars, #1 population growth in the United States, #1 for net migration, and #1 best cities for retirement is Scottsdale, which is part of the Phoenix metro. So incredible opportunity. We don't ever raise huge amounts of money in pref equity because we'd like to basically raise as we go. And that's why you've seen it a few times before. But if you haven't jumped in, it's still available, won't be available for long. So if you're interested, check out this barcode or this link. You can also talk with Peter Majeski. He's our investor relations guru. His email is up on the screen. And we will also in the poll we'll throw up a poll and you can indicate interest that way. All right. Now I want to talk about something incredible that's happening in the data center arena. So far, we've been talking about AI, right? So all of our conversations so far have been AI, AI, AI. Now I'm going to start diving down into something that Nvidia is doing. So the CPU that's on the screen is Blackwell, and Nvidia basically launched the CPU earlier this year. And there have been a huge number of orders. Just Elon Musk has ordered, hundreds of thousands of these Blackwell chips. And altogether, I think there's been $3.6 million of these ordered, mostly by the big companies, the logos that you see on the screen, right? So hyperscalers are ordering these CPUs or GPUs at incredible levels. And the reason for that is that we believe that this guy, who is at this point the most powerful CEO in the world, his name is Jensen Huang, what he says makes perfect sense to us. The next wave of AI will demand 100x more computing power than previous models. And as a result, Nvidia sees something that we absolutely 100% agree with. They see $1 trillion. That's $1,000 billion of data center builds just by 2028. Remember, we're at the end of 2025. So he's talking about basically, we're talking about 3 years. Currently, there are only $40 billion worth of data centers in construction in the US, and that's already up 400% since 2022. So they're up 400%. They're at $40 billion. Nvidia thinks we need $1 trillion worth of data centers. They might be off by a little bit, but even if it's 1/3 of 1 trillion, well, that's 300 billion. We're only building about, currently we're only building about $40 billion. So here, this 330 billion. Remember, I mentioned over 3 years. Well, that's what big tech's spending just this year in 1 year. And then if you say potential growth in AI by 2028, you take that 330 billion, multiply by 300%, boom, that becomes exactly this number, 1 trillion. So there's multiple groups that we're looking at, we're going to need about $1 trillion of data centers. And as a result, data centers are basically the new oil, right? So here, I mentioned on the last slide, this number, there's now $40 billion worth of data centers under construction. They're up 400% since 2022. And there's so much data center construction going on that office, which for decades, many, many decades, was the largest real estate vertical in the US. Obviously, it's gone down because of, work from home. So going down, 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 down. And then you look at data centers going up. We think that in just another 2 or 3 months, there are going to be more data centers being built in the United States than offices. And this is spiking the electricity consumption tremendously, right? So that, you can see where we are with 2025. So we're right here, right? And we're looking, and this is about 400 terawatts. The world basically consumes about 400 terawatt hours as of 2025. And you can see that it really started to spike here from 2020 onwards. And we're now projected to get to north of 800 terawatts. This looks like it's about 950 terawatts from where we are today. Right here, we're at a little over 400, and we're going to more than double by 2030. So we're going to double the total amount of electricity that we need in just 5 years. That's absolutely crazy. And that's where my first tip comes. My first tip to you is this. Of all of the sectors in the S&P 500, the least sexy one over the last 2 decades has been utility companies, right? And if you look at their PE ratios, they're still very low compared to everything else. But electricity is all of a sudden sexy, right? The grid cannot handle all of this expansion. So people have to use all kinds of crazy things. Look at what Elon Musk did. He was building the world's largest AI cluster in Memphis. The cluster is called Colossus 1 and Colossus 2. To power it, he didn't want to wait for the city of Memphis to give him power. So he basically purchased 33 gas turbines, 33 separate gas turbines, put them on a ship, bought them into a port in Louisiana, and had them driven to Memphis. And currently, about 15 to 17 of those turbines are on at any given point in time. And just so you know, natural gas is actually fairly clean burning. So he's not adding to a huge amount of pollution. He's just found his own solution. So bottom line is, we're going to need to find a huge number of solutions. We are not going to be able to create the amount of energy that's on this page. There is no chance that we do that. Statistically, it's a 0 percentile chance, which basically means that energy prices have to go up, which basically means that profits for utilities have to go up. So my first tip to you, and again, I'm not a stock picker, so do your own research, is that you really need to look at utility companies, right? The second piece is, if we build anywhere near $1 trillion of data centers, even if we're off by 2/3 there, and we build $300 billion worth of data centers, they use such a massive amount of transformers and switchgears that if you are, have exposure in your stock portfolio to companies that are making transformers, making switchgear, or refurbishing transformers, I think you're going to be in business. And haven't we had a humongous amount of trouble finding transformers for our projects? I mean, it's just been
for years.
Completely crazy, right? You have to order transformers 15 months in advance. 15 months in advance.
Yeah.
And for a lot of people are like,
sometimes
I'll just buy Nvidia stock. Okay, that's fine. If you love Nvidia stock, then you and I, obviously go ahead, buy Nvidia stock and be done with it. But then I think more of you that are listening to me are saying Nvidia may be too expensive. Nvidia may not be able to sustain this crazy rate. Its PE ratios are very high. If you're that majority, that silent majority that says, okay, I think it's too late to invest in these big companies, then I'm giving you examples of how you can invest in small companies. And you might say, how am I going to find companies that have exposures to transformers and switchgears? Well, through AI. I mean, you would simply ask ChatGPT, and you would say, this guy Neal Bawa has this thesis, and I'm interested in investigating this thesis. How do I get exposures to companies building transformers or switchgear or refurbishing transformers and switchgears? And it'll give you a lot of interesting tips.